The stock market has been coming down quickly, seeing some of its worst days since the early part of this pandemic, and now the third quarter economic data is out, and it looks like the United States economy is recovering faster than ever, but the stock market doesn't care. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com, and welcome to The Minority Mindset. I wanted to make this video because we have seen a very quick stock market sell-off again, and many people have started messaging me, asking me what's going on. People are panicking, asking if this is the time to sell. So I wanted to make this video very quickly so you can kind of get an idea of what's going on and what you can do to capitalize on what's going on in the stock market. Look, we all remember what happened back in February and March when the United States economy shut down. The stock market tanked because nobody knew what was going to happen and what was coming in the economy. Now with talks of another potential lockdown in the United States because of everything going on in Europe and the rest of the world, people are worried about what's going to happen in the United States, especially since we also have a presidential election coming. Couple that with the fact that we don't have a new stimulus plan passed, an election that could completely change the way the economy is run, and people potentially starting to worry about the economy because they see how many people don't have a job, and that has caused a stock market sell-off. I said this back in February and March, and I'm going to say it again. Emotions kill profits. Every economic crash and recession comes with opportunity for investors who know how to think different. And in this video, my goal is to help you understand what you can do. That way you can come out of this mess a financial winner. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. The biggest issue in the stock market right now are the rising number of cases of this virus, jobs not being there, and this presidential election, which is a big question mark. We're seeing lockdowns happen in Europe again, and this affects the United States for one because we do business with countries in Europe, and so if they're not making money and they're not doing business, we're not making money. And secondly, well, if you remember back in the early parts of this pandemic, Europe shut down, and then that was kind of the trigger, which also led to the United States shutting down after that happened. At the time of me recording this video, the United States doesn't have any plans to really change what we're doing as it is. However, that could change in the future depending on who the new president is and depending on how this virus goes. Now, I'm not going to go into this topic too deep in this video because I already have a video coming on this potential third wave. So if you haven't subscribed to our YouTube channel yet, make sure you do that. But what you have to remember is that the stock market is emotional. People go to the stock market to buy and sell stocks, which are companies based on what they think is going to happen in the economy in the future. Now, the stock market is also very accessible. You can buy and sell stocks right off of your phone, which is a great thing because now so many people have access to the stock market. But the downfall with that is you can see panic and you can see fear happen in seconds. If you get worried about another round of lockdowns and then you get worried about the economy and you get worried about your stocks and you see stocks coming down, you can very easily go to your app and just sell your stocks, and this can cause a mass sell-off. This is why I say the stock market is emotional, because you can see these wild swings in the stock market even though you really don't have any major changes. Back in May, June, July, August, you remember, we had all this bad data coming out about the economy, and anytime you had bad data coming out talking about historic job losses or talking about historic businesses going bankrupt, what would happen? The stock market went up. Fundamentally speaking, it made no sense, but people were riding the wave and they just wanted to make some money. Now we're getting reports saying that the United States economy is recovering faster than we thought, and the stock market isn't moving. Maybe the stock market was overbought and now it's correcting, or maybe people are realizing, yeah, the economy is recovering, but we're still pretty far away from where we were before. In any case, what you have to remember is that in the short term, the stock market is very emotional and it rationalizes over the long term. So if you want to make money in the stock market, you have to be a long-term minded person, that way you're buying strong companies, strong investments, and you plan on holding them for the long term, and your goal is to buy them when they are on sale. When people are panicking, when they're selling, and when the stock market is tanking, that's when I want you to come in as a smart investor, as a savvy investor, and I want you to be buying these stocks, buying these investments of strong companies when they are selling for deep discounts. If you were buying back during the February and March crash, you made a ton of money in just a few months because the stocks crashed, but then strong companies recovered very quickly, and if you had bought in when everyone was selling, you were able to make tons of money in a record short amount of time. When people are scared and selling, that's when you want to come in and buy. The reason this is so hard to do is because a lot of us are programmed to think in the short term. We want to make money quickly. So if we invest $1,000 or $10,000 or $100,000 into the market today, we want to see this money stay green forever, right? And so if you invest your money in the market and then you see, oh, the stock is down 10%, people start to lose faith in their investing ability. They start to lose faith in the economy. And then what do? They start to panic sell because they forget that they are investing for the long term. Over the long run, the United States economy and the stock market have always gone up. Yet, the majority of people lose money in the market. Why? It's because we get emotional. We don't have that long-term minded thinking. We think in terms of weeks and months. And so if things don't go our way and we start to see things crash or people panic, we start to panic too, and so we start to sell. If a company that you're invested in is on the verge of bankruptcy, then yeah, sure, panic sell. But if a company is strong, it has good fundamentals, is making money, and its revenues are growing and its profits are growing and the stock is tanking, I want you to come in and use it as an opportunity to buy when everybody is selling. Now, of course, investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So make sure you always do your own due diligence and never blindly listen to a random guy on YouTube. But this is how the real big money can be made, is because you're buying strong investments when they're on sale. Now, before I get into the different ways you can buy and creating a strategy for yourself, if you are interested in investing in stocks, you have to use a stock brokerage like our sponsor, Webull. Webull is a free brokerage. They don't charge you a penny to make a trade because they're a commission-free brokerage, and they're giving you Minority Mindset fans free stocks just for investing with them. All you have to do is create a free account, fund it, and then they're giving you Minority Mindset fans a free stock valued up to $1,600 when you use our link in the description below. Minority Mindset is a paid partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to create an account. They don't charge you a penny to make a trade, and they're giving you free stocks. So if you want to learn more and see how you can get your free stock, I got the link to how you can do that with Webull in the description below. One strategy that I like to follow, again, don't just copy me blindly, do your own research, but one thing that I like to do is something that I call drip investing. I have a list of stocks and funds that I want to buy. So you can start off with a list of 5. You find some companies and some funds that you like. These are the companies and funds that you're doing research on and that you know are good investments. Once you have this list of the companies and funds you want to buy, what I do is I just like to wait for these stocks and funds to come down. In times like this, anytime these stocks or funds fall by 10 to 15%, I buy. But then as they fall further down, I buy even more aggressively. Now what I'm doing is I'm not trying to time the bottom. I am buying on the way down, and the further down these stocks and funds go, the more aggressively I buy. I've already done my research beforehand. These are companies and funds that I believe in, and so I want to buy these funds, and the cheaper they are, the more I want to own. You have to figure out what type of investor you are. I like to look at a company's fundamentals. I want to know how much money they're making revenue. I want to see how their revenues are growing. I want to see if their profits are growing. I want to know how much cash they have in the bank. I want to know how much debt they have. These are the things I look at. I look at the fundamentals in terms of how much money are they making, what do they come up with, and how much are they growing. If they made a ton of money, which is cool, but if they are losing money every year, as in like last year they made more money than this year, and 2 years ago they made more money than the year before, I don't like that, because you see the revenues are going down. I want to see upticking revenues, upticking profits, and more products coming. You also should know that not everybody needs to be a stock picker. Actually, the majority of people probably shouldn't be in the stock market picking game. The alternative of what you can be doing is investing in funds, ETFs. Now you're investing in this fund, this group of stocks, and this fund is now investing in 10 stocks or 100 stocks or 1,000 stocks. So you're just investing in this fund, which is giving you exposure to a bunch of different stocks. For example, there is a fund called SPY. If you buy shares of this fund, I'm not telling you what to do, but if you did, now you're getting exposure to the general stock market, because SPY invests in the top 500 companies on the stock market. So if you invest in this fund, you're essentially getting exposure to the stock market. So if the stock market goes up, your fund will generally go up. If the stock market goes down, your fund will generally go down. If you do not know how to read a company's charts, or if you don't want to read a company's charts, or if you don't care about learning about a company's fundamentals and finances, and you believe in America, you believe in the economy, and you want to be invested in the stock market, then don't go the stock picking game, because that can be a lot harder, because now you have to do so many more things. You can just invest in a fund that gives you exposure to the stock market, because now you're just hoping the stock market goes up. The key with all of this is you have to remember your goal is to be a long-term investor, not a short-term trader, right? If you want to be an investor, you want to own these companies and funds for the long term, because that is your goal. You want to make money over the long term instead of just trying to flip a quick buck. This is what financial education is all about. We have a ton of videos on our channel if you do want to learn more, so make sure you subscribe if you haven't done that. And we also have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading our financial education emails by clicking the link up here, or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about how you can find a strong company to invest in on the stock market, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.